Jamie, Steve, what's going on?
Hey, Scott, Steve, what's happening over there, buddy?
Yo, hello. It's Monday, short week.
It
Looking forward
is.
to a good short week holiday.
Yep. July 1st is upon us. June is in the books, and here we are, first day of July, and we all know what's coming up. July 4th, big party time, and a kind of a weird holiday schedule. We might as well just kind of address that right now so everybody has it fresh in their minds. And correct me if I'm wrong here, Steve, but half a day on Wednesday, right?
All right,
Markets closed on Thursday with a
right.
full-blown session, which will probably be lightly attended for Friday, right?
I think the powers that be wanted to have a 5-day holiday and then just put their interns and their assistants there on Friday for them to really stare at nothing.
Yeah, pretty much. Makes a lot of sense. All right, everybody, welcome to the first office hours of July. I'm your host, Jamie, and I got my trusty wingman, Steve, here. So let's get on with it here before we get going. Just the typical boilerplate disclaimer here, as we do with all of our webinars. So just keep in mind, whether it's this one or any of the other 8 webinars that we're bringing to you every week, all the information that we share with you guys is for informational or educational purposes only. Please don't misconstrue what we bring to you as a solicitation to buy or sell anything. If you do need that type of advice, investment advice, what to buy, when to buy it, when to sell it, all that good stuff, please seek out a registered investment advisor or someone like a Series 7 licensed stockbroker that can legally dispense such information to you. So everything we share with you is for educational purposes only. And of course, we always like to take a moment at the top of the webinars to let new people that might be in attendance for the first or second time kind of tell everybody about the vibrant community that we fostered and developed around the award-winning software known as Trade Ideas. And you can see up here in the upper left-hand corner, Barry's Trading Room, um, hosted by none other than Mr. Barry Anderson. He opens the room 30 minutes before the open, and it is a great place to be, whether you're a seasoned trader or just getting in here for the first time and trying to figure out what trading is all about. So nice thing about that room is there is no charge to get in there. If you have done your research and shopped around trading rooms on the web, you know that most of them worth their salt are not free. All right. Matter of fact, they're not exactly cheap either. So, if you haven't taken advantage of the resource known as the trading room here at TI, you might want to do that. The trading room just recently underwent a facelift, got some new software running it, which Barry is liking more and more every day, getting the kinks ironed out. A nice environment could be 400, 500, 600 people in there, depending on the day. But in the end, Barry does a super fantastic job, not only at showcasing the way he uses trade ideas, but shows you his trades in a live environment as well. And there's a lot of good guys in there to learn from. Of course, today is Monday. You get myself and Steve for office hours. Steve's going to take the steering wheel for tomorrow, Tuesday's Trade of the Week webinar. Andy Lindloff's going to ride shotgun with him. And then we change it up just a little bit in the midweek. Hump Day rolls around Wednesday. We bring in Dan, the CEO and founder of Trade Ideas, along with our Chief Technical Officer, Mr. Brad Williams. So always interesting there. As far as the 5 p.m. Eastern webinars go, we round those out on Thursday with Andy's Trading Studio, and I ride shotgun with him. Then Friday comes along and we change it up completely, and we've got the Friday support session. We start off at 11 a.m. Eastern, and we allocate 3 hours. Typically goes anywhere between 2 and 3 hours. Anything is fair game there. You're going to have myself, Steve, Andy, and Sean typically in there all at the same time. So whether it's a simple configuration issue or a back testing question or brokerage plus automation type information that you're seeking, you can find it in the Friday support session. It's whatever you guys want to talk about is fair game in there. Also, the other 4 webinars that we have coming at you every week are the TI University. 4 of these guys Monday through Thursday, beginning 101 Monday, going all the way through Thursday with advanced, with Tuesday 201 and Wednesday 301 mixed in the middle there. The content of these webinars remains static, so it's the same content every time. We do recommend that you take these in the sequential order because what you learn in 101 you'll need to build on 201, so forth and so on. So great place to come, whether you're advanced or beginner as well. If you do have something pesky that gets in the way, like a job, then the good news is we have these recorded and posted on our YouTube channel. So since the content remains static, if you can't make the live session, then you can always go watch the pre-recorded versions on our YouTube channel. Of course, we always like to show how everyone, and when I say everyone, our client base has increased substantially month over month ever since we introduced the first AI module back in the beginning of 2016, and you can see how the trend is going here. Also, we've added this slide recently, which is data we've been compiling since we made Brokerage Plus available, which is the add-on to Trade Ideas, which connects to Interactive Brokers. All right, look at it basically as a platform that tacks on top of the current IB infrastructure, connects, gets live, and then you can use our Brokerage Plus to, in essence, trade at IB. We've talked about this time and time again. IB might be a little confusing sometimes, kind of a different environment, so to speak, as to what us old guys are used to. So we kind of came up with the idea, well, let's make them more intuitive, for lack of a better term here, something that's probably a little bit easier to trade with. So whether it's manual trading with Brokerage Plus, which is now available in the basic subscription, or the more advanced stuff like automation of your own strategies that you come up with, or automation of Holly strategies, which is available in the premium version, Brokerage Plus is a great tool. It's a great thing to trade with IB. And as you can see, blue orders, or the blue bars, are live orders, and the orange bars are the demo orders that people are pumping through there on a month-over-month basis. So we can see not only live orders, but demo orders on the rise as well. So people like it and they're using it, and that's why we like to show you this graph here. So if you haven't tried out Brokerage Plus, by all means, try it out, see what it's all about. Okay, on to the agenda for the day. And Steve, it's like Groundhog Day, kinda. We gapped up to all-time highs again, or pretty darn close, and then we know what happened the rest of the day. So if you're ready to talk about the market recap, I can kick it on over to you, and we can look at the squiggly lines here.
All right, sure. Well, you do that, and Randy, the second part of your question is maybe zoom in on the chart, so it really zooms in, then you can get that line placed a little easier. That's the only thing I can think of, because there's no way to enter a value. All right, I'll show you.
And I know exactly what you're talking about, Randy, because I was trying to do that before the webinar started, and you just can't get, like, it was moving in 2-cent clips, but yeah, I understand.
All right, so welcome to my screen here. We're going to look at the S&P 500 first by way of the SPY ETF, and I've cropped it here to a 1-year snapshot. We've got a look going back 52 weeks, and we have seen quite an adventure in the market. But in hindsight, the volatility was basically down here in December and July, November, as we recovered the V bottom. You look up a V bottom, and you don't have to go far. This is it right here. It's a volatile washout of the weak hands and the strong hands of the bull market. Said, yeah, I'll take those. And over time, they just ground their way back through all these resistance levels that were put in front of it. And the market in itself is still behaving as you would expect a bull market would, especially when we're at all-time highs where we opened today. But these orange lines, again, kind of come into real good focus when we zoom out to this time frame of a 1-year snapshot. We can see the support here a few weeks ago, a few months ago here. We can see the resistance of this line here, here, and here, and then here and here. I don't know why I'm saying here. We can draw it just as easily. There we go. Blue is the color of the day, right there and there. Here and here, resistance on that line, resistance, resistance, resistance. And then, we moved through all that level, and for the most part, let me zoom in a little bit so this now makes sense. This upper line was, of course, the prior highs in the S&P. We kissed it here, repelled down to this midpoint line, which was again confirmed by back here in history. And we're placing higher lows along the way. So what I'm seeing now is higher lows. More importantly, this is a great example of how this market, more than ever, and Jamie will agree, is a market of 3 steps forward, 2 steps back. You know, we had this great breakout here above and a close above with a nice tailing wick. Beautiful day right there, closing at all-time highs on that day right there, only to be just immediately faked out. 1, 2, 3, 4 days of purge. Look where it purged back to. Just like clockwork, coming back and filling the gap. So I mean, you get 3 days forward and you get 2 steps back in terms of steps, as the axiom goes, the expression goes. So back on our way again. That axiom works. 3 steps forward, 2 steps back, as long as we continue to kind of build higher little base camps along the way, which we are doing. So now here we are again, after maybe expending too much energy on this candle here. A big in-breath, pulling back, giving the troops a warm meal in the shower, and grab the battering ram and push again. If I was short, I'd be really scared. We had a beautiful push higher, albeit it was a gap. We'll talk about that in a minute. But we are back above this critical all-time high line and closing above it. The funny part is, I hope this isn't going to be the week where we move higher on red candles, meaning the overnight markets gap up higher, and then we take a look at today, we gap up higher and just kind of trade lower for the day, then the bots square it up at the end of the day. And you have these small red candles, but we move higher in the net change column. You come home and the news people says, we had a rally today in the market, when in fact we didn't have a rally. We had a gap up and a give back, but at the end of the day, it's higher. And if we're looking at swing trading charts and daily charts, this is our bread and butter time frame here. So there's no case to be made for the bears. There's no short case to be made. This market looks like the train is leaving the station. If you're somebody that's waiting for a catalyst in the news, you know, you might be late. The price action is signaling we want to continue to move higher, just based on what we're seeing here. Another thought, yeah, 3 steps forward, 2 steps back. We're grinding higher, but maybe we do it on gaps and red candles. You know, again, that's no fun if you're, you know, trying to time this market and be a bull and be a trader. It's very hard if you're not participating in the overnight gap gift that is given a lot of times. You know, if you are a day trader and you wind up getting these giant gaps, you can pretty much see when they're that big, the market has nowhere to go when we open. And so the rubber band kind of has to bring back standard deviation, you know, reversion to the mean, whatever you want to call it. You know, so if you're sitting here trying to find buy points throughout the day on a market where we had a big gap up, yeah, I've made a case for right here where the moving averages might catch up there. One could try that, but we quickly saw that the price was no longer interested in that. As a matter of fact, 10-day moving average on a 15-minute chart rolled over and grabbed the price once again and held it down. So point is, if you're a day trader, step number one, take these giant gaps when you get them on the open and thank your lucky stars for giving it to you. But don't try and give it back by going along, because it's just, you know, 3 steps forward, 2 steps back. It's what we've got. It's not the easiest market to trade, but in the bigger picture, if you're a bigger picture swing trading guy, just sitting on your hands and not getting discouraged by these 4 days of pullback that we had last week or 2 weeks ago, the bigger picture says we're moving higher. It's time to actually delete that line there and probably even move this line up until this pivot. Why did I move it up into that pivot? Well, you know, it was resistance back here. It was filling the gap here. It was our latest level of support on a higher low that we put in. Speaking of trying to grab the number, here we go. That's close enough for me right there. I think this is our near-term range. And if you're short, you've got nothing above to lean back on by looking in the past and saying, you know, where is our next level of resistance? It's not existent. It's not back there at all. So interesting times. We're in an all-time market highs until further notice. You know, like Sean says, it's a bull market, you know, and you should be buying the dips while we can. That's not going to last forever. At some point, there could be something goofy that happens out there that changes the minds, but the footsteps in the sand tell us we're going to continue to move higher, even if we do it on stupid red candles and overnight gaps. The bottom line, the market is being dragged higher for the most part by technology. If I look at the financials here real quick, you know, they're close, but they're not close to all-time highs. And when we have the S&Ps, we have a lot of things going on. We have technology, financials, industrials, but the tech, for the most part, seems to be, if I could even do XLK, that's Technology Spider, it's also breaking out here to new all-time highs. So that tells me that's the most important weighted part of the S&P 500. And then the NASDAQ, again, has kind of been the strongest for a while. It's not back to all-time highs, but it's been a very, very strong sector. The weak sector has been continues to be the small cap sector via IWM. Look how much lower they are under the all-time respective high of small caps. So if this market continues to get dragged higher by the S&P and the NASDAQ techs, watch for a possible continue of looking for profits in the IWM. As a matter of fact, I think some of the smart traders might have actually looked on that last 5-day pullback we had, digging in right here. I think even Jamie noticed it during the day. We were chatting a lot that the IWM had the biggest bounce when the other stocks weren't doing much at all. There's tons of money being poured into the small caps. And look at that, one day, then Friday, and then gap up today. That was a giant gift for anybody that bought down here. So of course we're going to have a little bit of a relaxation, maybe a couple of days of consolidation, but keep an eye for a possible, looking back and trying to find value as the big money managers have to put money somewhere to the long side. Place 401k money, they might start looking at maybe some smaller cap stuff. And if we see outperformance in the IWM, then your focus list of trading stocks, whether they're day trading or swing trading, probably might want to maybe focus on some of the smaller cap stuff based on what the bigger cap shadow or backdrop might be showing us. So that's pretty much all I got, Jamie. You're having to convince me of a lot of stuff if you're trying to convince me the market is a good short right here, because it doesn't look like it.
I would concur there, Dr. Steve. Alrighty, thank you very much, Steve.
Right on.
Quality as always. Let me grab it back here and we'll talk about what Miss Holly did today and a couple of changes in Holly, which I'll go over as well. So just let me know when you can see me, Steve.
Yep.
Okay. Oops. Oh no. I got it back. Well, hold on, ladies and gentlemen. I did the old shakeroo. And yeah, but some of my windows didn't come back up here. Who would want that option? Hey, when you shake your mouse real quick, all your stuff will disappear. Yeah, sounds like a great option. Okay, I think I've got everything back here. So welcome to my desktop here. Let us talk about expectations about 15 minutes into the session. So as Steve was illustrating here, and as we all saw in real time this morning, big gap up to all-time highs, kind of a repeat of what we saw on this other big candle here, where, on that day we managed to close above, but on this one, things weren't so bullish after that huge gap up. What kind of tipped me off in the first place is my compare count window that I like to consult about 15 minutes into the open here, not about, but exactly 15 minutes into the open. This is what it looked like today after that first 15 minutes. And typically for, a decent read here, we like to see whatever the bias is going to be, whether it's up to the upside or the downside, at least at 55% to give me a little bit of confidence that, yeah, we might go higher today. But as you can see here, coming out not at 50-50 or 51-49, but pretty close at 52% bullish, which to me right off the bat this morning made me go, not going to trust that long side a whole lot. Predominantly going to be looking for more short plays, and of course that's where a lot of the quality patterns resided today. However, Holly can't see things like this, so no big surprise today based on the calculations that were run as of close Friday and what we've been doing the past few days, that predominantly she was mainly long today. But definitely when we see these counts, and it could have been the other way around, it could have been 52% red, 48% green, but whenever I see metrics like this, significantly below the 55% kind of minimum threshold that I like to see, it basically means anything's on the table. Could go up, could go down, but as everybody could see and feel today as the market was progressing, that first move was kind of a regression, not filling the whole gap, but getting about halfway down before we finally turned and headed back up. So that's what kind of seasoned me for the first 15 minutes. Now, hopefully that makes sense. And when we get to the setups that we see after Holly, when I talk about the range breaks, it'll be pretty clear here that a lot of the quality patterns on that side of the fence were to the downside. A lot of the long ones, long alerts that were coming out were real stretched out. There was no pattern cohesion, so to speak. Those were all on the short side, and there were tons of them today. No big surprise there. But first, let's go ahead and talk about Holly here. Number one, Holly between the three Hollies, and keep in mind, everybody, we're in the process of releasing new version, which will allow you to view all of the Holly segments in one instead of viewing them independently. I'm not sure if that version has been released yet to the public, but basically you're going to have the following. I'm viewing the All Trades blotter now, which contains all of the Holly segment strategies, and it's just going to be as simple as this. By right-clicking, coming down to segments, and you can still pick and choose. That option is not going to go away, but if you want to see them all, you just leave it on all. That's the positions plotter. Same thing goes with the strategies panel. Right click, you can see I'm seeing all of the strategies that all segments brought to the party today, but you'll still have the option to, well, for now you do. Don't know if these options to segregate will remain in the future, but for now, they are still there. So Holly wasn't the busiest today, coming in with 19 trades. If we tally up all the trades over here, we get 19 trades today. Now, what I'd also like to point out is, notice the values that are being reported over here. And it's not because I set them that way. Basically, what you're seeing are the results of the Holly modules here, assuming that you were making 100 shares per trade. And that's the way it's going to work moving forward. You know, I used to have mine on a single share all the time, and I would just look at the net P&L change from a penny by penny or point by point basis. But this is just going to make it a little easier, whether you're new or whether you've been using Holly for a while, to go, okay, if I'm trading 100 shares, then if I traded Holly 1.0 today, minus commission and slippage, 132 bucks. We could also say 1.32 points. Right here with Holly 2.0, if I was trading 100 shares, be up 64, 65 bucks almost, and we could just call that 64 cents. And down here, 44, almost 45 with Holly Neo, or what we could say would be 44 or 45 cents. So this is the way that they're going to report by default moving forward, in case anybody was wondering about that. So Holly spit out 19 trades today, a long bias. I think about 20% shorts here with 1, 2, 3, 4, 5 short trades on the blotter. Did get a little action out of one of them on the EVOP, but as you can see, most of the shorts might have worked for a little bit. Risk off mode, the FSLR worked, but if you held on, that money evaporated. So new P&L values, 100 share default is going to be the default mode used moving forward. So you're looking at this, you're like, okay, well, on 19 trades, if I made every trade and got exactly the numbers here, we'd be up about, and I just worked up a little worksheet here because it's always good to do this stuff, because you might be wondering, well, today if I ran Holly in full auto mode, how much would I really be up? Okay, so I've taken the liberty here of adding up all the modules here, 132.50, 64.49, and 44.81 for Neo, and we come up with $241.80, assuming we were executing 100 shares per trade, or what we could call 2.4 points. Now, we always talk about, okay, these numbers are not inclusive of slippage and commission, so let's run the numbers here. If we have 19 trades, and if we're trading at Interactive Brokers, which is generally about $1 a side, right? So $2 times 19, that gives us $38 in commish. Yeah, not that bad. We can tolerate that. Even bump that up another 10, 20, 30%, and you're still not paying a whole lot in commission. Where these results will probably be impacted the most is in slippage, which is the difference, if you're running Holly Auto, between when the signal comes out and where the stock is actually trading when you actually get your fill. All right. Personally, I've pumped tons and tons of auto trades through Holly. So what I've done here to account for slippage is just multiply the number of trades by 6 cents, accounting for 3 cents of slippage on the entry, 3 cents of slippage on the exit for a total of 6 cents of slippage on 19 trades. Doesn't sound like a whole lot, but man, once you calculate it all up, 114 bucks in slippage. So when we sum the two here, we get 152. We back that out of the total here. And this would be a pretty good estimate if you were running Holly in auto mode today, assuming you got all of your fills, right? Probably about 90 bucks after commission and slippage, or, you know, plus or minus maybe 10% from there, just depending on if some of the things had bigger spreads and widened up at some points. But there's a lot of factors to contemplate there. This is just a general rule of thumb. So hopefully this kind of illuminates, well, how much could I have really made potentially if I was auto trading Holly? Not quite, about a little less than half of what Holly is showing there after commission and slippage. So just wanted to go over that just in case anybody was wondering. Good information to have. And now let's talk about some of the risk-on opportunity that Holly presented today. And we typically do that by looking at the difference between the risk-on column, which I have this blotter sorted by risk-on here, and consulting the risk-off and seeing if we have any spread in there. All right. So we can see on this GTT trade, which just happened to be one of the biggest, or if not the biggest percentage winner today, looking like 5.55% when the target got hit here. And we can see that was just a very nice trade in Holly. Kind of went sideways a little bit for the first 30 minutes after she called the signal there, but then just motored on up for about an hour and the target was hit. Even kept going a little bit further past that target hit. Not really any risk on spread to be had there because we got risk on. We have it finishing lower than what it plucked out with the risk, or the risk off and the profit target there. I do like this chart a lot for a couple of reasons here. And the first reason, as we always say, we got statistical probability coming out of the machine that is Holly. The 5-day bounce issued the trade here. So what were the odds on the 5-day bounce? Let's see here. 5-day bounce, we had a couple of different versions of it coming through today. This is the one that produced GT. 62.1% coming into the session. That's the only one it spit out. That's why we're seeing 100% there. And we see a 90-minute hold time there. Of course, it didn't even get to make the hold time because the profit target was hit. But just a nice trade all around. And what I really like about this one is if we just cut a little line across that opening high there in the first 15-minute candle, little regression down to that 10 period, which can be of great importance a lot of the times when we're watching a stock in play with momentum. But Holly gets it right here. And then what do we have creeping up here about 30 minutes later, after we're already in the position with Holly? We get a nice crisp range break there that really just boom, 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 marches it on up to the top. So a lot of the times, if we can spot that auxiliary pattern that might materialize after we've made a nice statistically weighted entry with Holly, well, this would have been a great time right here to add to that position, really leverage it, and well, you see what would have happened there. And we also had volume on our side today with GTT, finished doing about 80% more volume than normal. So a lot of good things about the GT trade, but no risk on opportunity there, but not the case with CNI. This is what I like to refer to as classic risk on Holly, or identifying risk on opportunity, because in risk off mode, which once again is just Holly obeying her rule set, like me, you, or any other, you know, hopefully sane trader would do during the session, stop losses, profit targets, timed holds, all that good stuff. She made it the duration. Got dough wants to go, once again, was the strategy that spawned it. So let's just take a peek here. Underperformed as a whole, came into the session at 60.6, only won 1 trade out of 3. So that strategy actually underperformed today, but we can see the hold time there, 75 minutes. Holly made the hold time on this one. 8 cents is what she got, because what do we have here? We got sideways movement, just ebbing and flowing around that entry line for a good 1, 2, 3, 4, 5, 15-minute bars, an hour and 15 minutes. And the longer Holly's in a trade and we're ebbing and flowing around this entry line here, the more likely she is typically, which is why I said this looks classic, but lo and behold, it was a timed exit. A lot of the times when we see the sideways movement, we'll see her exercise her two audibles, one of her two audibles, which are reduce risk and profit save. Not the case on this one, but looks very similar to when she does that type of activity. So basically, what have we seen here? Just ebbing and flowing around the entry line. Not really acting like it's going to get down here at all to the stop loss. So if we see Holly plugging out here, taking her 8 cents, we could have just simply made the decision here. Going to stay in it. I don't mind that it's ebbing and flowing around here. It's not tempting the stop loss. You know, break even, if we made the decision in this line, you know, since we're in such close proximity and we can see the ebb and flow, probably wouldn't have been the best call to use the break even stop, just sticking to our hard stop. In the end, we could have gleaned an additional, I don't know, there was another 47 cents here on the table. We back out 8 out of 55, which is a pretty significant difference between 55 cents and 8 cents, just by exercising a little patience. At the same time, that 10 period is giving us comfort as the day progresses. Once again, got to give credit to Steve Gomez for the 10 period turning me on to it. If you guys don't have a 10 period on your chart, you might want to do that. 15-minute specifically. Okay, not a whole lot of juice in these guys, but these are just glaring right here. All right, EVOP, which was one of the shorts today, and here we can see that sideways action. All right, and why does Holly pull the plug? Well, reduce risk, exactly what I was referring to earlier. Holly makes the call right here. We get sideways movement for about 45 minutes. And on this one, she does get antsy and pulls the plug in reduce risk mode, whereas we can apply the same principles as last time. All right, well, we're ebbing and flowing around the entry line, hasn't even made the slightest inkling like it's going to get up here and stop us out. So once again, we can say, you know what, Holly, I see you getting out, but I like the pattern that's evolved. We got the statistical probability on our side. So, you know, why not be patient and let this thing work? Just the exact opposite of the long I was showing you guys earlier. Notice how now the 10 period is acting as the pressing hand, keeping that thing down. But had we made this decision here, maybe we keep our hard stop. Once we get this push, could have always set our stop to break even if that's the route we wanted to take, and it would have kept you in. So a lot of the times, until you get used to this methodology, maybe you do half and half. All right, I'll plug out for half with Holly. I'll keep the other half, use a break even stop, stick to your hard stop. But in this case on EVOP, got profit potential down to 29.04, so around about a point of profitability from the time that Holly made the entry until it bottomed out down here. So some nice risk on opportunity there in the short known as EVOP, and then we've got one to the long side as well. Pretty much looking like the inverse of what we just saw, just a little bit bigger of a push when this thing finally caught traction. Once again, my eyes are drawn not only, well, here it is right here. So once again, we got Holly making this the call right here in this nice little consolidation area, and then we get 1, 2, 3, 4, 5, about an hour and 15 minutes before this thing finally got up and went. Holly, once again, why did she pull the plug here? Going sideways, she gets a little antsy and calls it right here, takes her 8-cent loser, but once again, not even acting the least like we're going to get stopped out here, so a little patience pays off. And then we finally get this pop and go all the way up to 23.38. So not quite a point in this one, but some nice profit potential. The total value here showing at 44 cents going into the close, but much higher during the day as we took this little spike up here before regressing back down. Notice that when we got way ahead of the fast line there, and notice where it stopped coming down here. That fast line trying to keep it up, and even, you know, even right into the close, riding that thing like a champ. So a couple of good examples here. Risk on, one short, the rest were longs, and I think that's pretty much it for risk on here. I mean, we could take a look at this one because, well, there's a pretty big difference there between losing a penny and making 22 cents, right? That's a 23-cent spread in there. So once again, pretty much more of the same here. Why did Holly get out of RYAAY shortly after making the entry here? Once again, because it's going sideways. It's not going in the direction that it's supposed to. But the thing is repetition, repetition, repetition. Today was an ideal day to just sit and watch and wait for Holly to exit a trade on reduced risk or profit save based on what I saw on those opening compare count windows there, because anything's fair game. What did we see? We saw a slight upside bias, but the majority of the move for the day was to the downside. So that's kind of like when the wind is shifting directions and changing every so many minutes or so. Think about that. Think about just starting to monitor. I'm not saying completely focus on Holly on reduced risk and profit save, but these have proven to be time and time again some of the best patterns to pick up on. And we already have the statistical probability, and we've got a little bit of history here watching the thing. So just keep that in the back of your mind. Start watching when you hear Holly beep. If you have the sound on, which it's real easy to attach, we just right click and we go to actions, and then we set up the sound. Every time you hear that boom boom, you just look over and see what Holly's doing. Hey, she just exited a position. It looks nice and tame. I don't know why she's getting out because, well, I like the pattern. This can lead to a lot of good trades. So just keep that in the back of your mind. All right, moving right along here. Let's do a little time check. Okay, now let's talk about some of the nice crispy range breakdowns today. And I'm not even going to bother showing you guys the ones to the upside for my turbo breaks up tickers because they all look the same. You have these big run-ups today, and as soon as they hit highs with decent volume, a lot of them just pulled right back. So a lot of the quality was coming, and of course when I did the little wiggle earlier, I got rid of those windows. So let me just reactivate them here. Okay, so like I said, if we went through this ticker starting at 9 o'clock my time, about 30 minutes into the open, you just see it was acting basically as a top ticker all stretched out. If we wanted to find some nice tight range breaks to the downside, it was all this window today, and there were a ton of them. But I picked out some of my favorite ones today, which are easy to identify because that's what a range break is. We want nice tight movement before this lower or upper end is broken. Of course, that would be to the upside. We're looking at downside plays here. So PVH, not a bad setup here. We got the opening range here put in on this spindly wick to the top and wick to the downside here, which kind of messes things up, but still a tolerable entry here. So that was the low right here. And we did a good 1, 2, 3, 4, 5, 6, a good hour and a half of this type of action before PVH finally broke this level right here. We've got the risk drawn up for you. So if we short it right here, we look to the prior 15-minute candle, the high. If you can stomach that risk, it's a good trade. These are always going to have volume behind them because that's the nature of this window. If we take a look at PVH and how it finished, not knocking it out of the park, but a good 50% above average daily volume on the relative level. A nice tight risk up here to the high of that previous 15-minute candle, and a nice juicy reward area at the bottom here. So here's risk up here. Multiples bigger is the reward area. We've got a nice clean pattern, and we've got volume behind it as well. And of course, for those of you who've been following along as of late, you know that if you have this version of turbo breaks down or up, you got this next high or low filter here telling us right off the bat, hey, this is how much room could be in this trade before the next level of short-term support. And we can always confirm that on the daily, but it sure is nice having this number just pop out at you. All right, so that was a really good one in PVH. RTN, good old Raytheon, part of the military industrial complex. Even a tighter little consolidation period here. Hey, seller was obviously here in the first 30 minutes. They take a break for a good period of time, and then eventually, boom, we break down right here. Here's the high of that prior 15-minute candle. Also like that little topping tail on that candle, which gives me additional confidence. I like that because, well, buyers tried to take it up, couldn't do it. The majority of the volume was done in this candle. So we had a nice tight risk with the top of that wick there. And we can see what happens as soon as this level is broken. Just a push down, a little consolidation more before the final release. So once again, these are the setups that we like. Nice tight risk, reward area, multiples bigger than the risk area. Let's take a look at volume. How did Raytheon close today? With a nice healthy relative volume level of 1.42. Moving right along here. Weibo, WB, I always want to say Warner Brothers, but this is not Warner Brothers. And these patterns come in all shapes and sizes. We can see, hey, nice little hour and 15 up move here before finally peeling over. A little bit more energy expenditure than I like to see here. However, it's the high of the prior 15-minute candle. So we come all the way down for an hour, over an hour, and then this, because of this wick right here on the open, this is the level right here. And I see all this, and I'm like, yeah, I don't like that, but all that matters is the top of that prior 15-minute candle, which puts our risk up here, right? Entry candle right here, prior 15 minutes here. Okay, that's tolerable. Once again, we have a nice risk area, and we ended up with a reward area that you can fit at least 2 of those in, maybe a little bit more. And once again, relative volume finishing the day at 1.79, almost 4 million shares, where the average 3-month volume is only a little over 2. So even though we did have some, a lot more energy expenditure coming down here, we did have a nice tight 15-minute candle on the prior, giving us a decent risk here. Hey, and what do we have here? As soon as we close this level right here, then it was kind of, well, good night from the 10 period, right? So another positive attribute about that trade. And last but not least, probably the runt of the bunch here. And when I say that, you'd be hard pressed, maybe not quite a 2-to-1 risk to reward ratio here, but the trade worked nonetheless. From the entry that we had right here, approximately around 41 down to 40.73. So nothing to write home about on this one, but you were presented with a little bit of alpha here. But once again, just to reiterate the pattern, we got the signal coming in right here as the new low is breached. What appeared to be decent risk here, this one just didn't get up and boogie as much as the other ones, but still an opportunity to pluck out of it and not even closing back at the entry line by the close. So a winner nonetheless, even though it was a lot smaller than the other ones. And of course, the potential was bigger here. Sometimes they fulfill their destiny, sometimes they don't. And look how spotty the daily is over here. But nonetheless, it's the setup that matters. So 4 quality good ones coming out that I was able to spot in real time today, but there were many, many more, as is always the case with these 2 windows here. All right, and I wanted to make sure I had a little bit of time here, so we're in good shape, because I wanted to talk about something that I haven't really brought up in a very long time. All right, and every time I do the Advanced 401 TI University on Thursdays, and I'm going through the optimization aspects and backtesting aspects of trade ideas, we always come across the tab known as symbol optimization. And I kind of give my little spiel to everybody about how not to delve too deeply into that. But let me just get the panel up here and we're going to talk about it. So in this example that I'm going to use, I'm going to be using these 2 alert windows here. Turbo up, turbo down, looking at the big boys with the accelerated volume. So what I did here is I've already run the back test, but if I can't find them, we're just going to have to do it again here. I think I have here. Okay, so here it is, but I'm going to go ahead and run it again just to give you guys an idea of what I'm looking for here. And think about this. We're looking for contrarian entries using turbo breaks up, the big caps, to look for potential short candidates that might have a high probability behind them, all right? Because when a stock is out of its box, so to speak, or if it's heading up nicely, and once again, I got to backtrack here. These are not out of their box. They're not at all-time highs, but they're definitely stocks that have a lot of momentum behind them. And it'd be great if we could just buy these stocks and they would go up nicely and not ever throw any wiggles, but that's not the case, as we all know. So a lot of the times we can get good contrarian entries on shorter time frame hold times that look pretty darn good. And this is the example here. So we're going to back test it. We're going to omit the first 30 minutes and just keep it wide open here. We're looking for a nice intraday hold time. I've got it on 60 minutes, but whether we decreased or increased the hold time, probably not going to make that big of a difference. Risk management here on these guys, we're using a constant value of 1.5%. So think about that. The stock's been running. You're going to make a short entry, and for it to get you out, it's got to keep going another 1.5%. You probably even bump this up to 2, and odds would probably improve a little bit more. Advanced, we're just doing, well, I thought I had it on 40, but we're on 41 trading days here. So we're using this to make a contrarian short entry. When this is done, we should see identical results as we're seeing here. And it's not even the strategy results that we're going to be focusing on. It's going to be within the optimization tab going to symbols. So let's just make sure the same guys pop up here, the same results before we kick it on down the road here. Okay, 51.5, same results, so we're good to go. And so those of you who have access to the backtester have probably familiarized yourself with all of these different ways you can backtest. Price, time of day, other filters, which contains the entire basket of trade ideas filters. But we always caution you, don't get too involved in taking these symbol lists and creating juicy looking backtests because, well, you can be setting yourself up for disappointment. But using it in this capacity is completely different, all right? So right here, we're seeing the top 10 symbols that have performed the best in this fade type strategies. And here they are, 1 through 10, all right? Check out the success rates, okay? And what I've done here, well, I got to reset it here, but right now it's showing us having at least one trade over the 40 backtest period, 40-day backtest period. And you can see we got the minimum set on 1, but you see some repeat offenders, WB coming through 7 times, TSN coming through 6 times. So in the initial version, I just said, okay, they have to make it at least 4 times for me to even pay it any attention. So now when we set the minimum to 4, well, SWKS meets the minimum, but you got a lot of guys coming through here 7 times. So 7 times in a 40-day backtest period with these win results, this is something that you might want to pay attention to and not in an automated fashion or I'm going to take every trade that comes through fashion, but just in something like the following, all right? If these trades are coming through that frequently over a 40 backtest day period and they're winning most of the time, 85%, 83%, well, maybe I should take these symbols and simply point them to a list and watch these things as they come out. And assuming I like the chart setup on the intraday and the daily, that might be a good short to put on because I'm rocking some pretty good statistical probability on each and every stock here. All right. So once again, it's a way to generate some statistical probability for yourself, but then only take the trade if you like what's going on with the stock and the chart, which don't really know a whole lot of people out there trading without charts these days. I mean, it was possible way back in the day when Steve and I first started because we could distrust what we saw in the order book, but you know, the charts are all we have these days, basically, with the retooling of the markets. So it's no cool, you know, why is WB showing up 7 times and working 85% of the time? Why is Tyson showing up 6 times in a 40-day backtest period and working most of the time? Because that's the nature of that stock. Stocks are like people. They all have different personalities and they all have different ways that they pull back or perhaps bounce off of the bottom, right? So if we take the one showing us stocks hitting lows and go through the same process, which everything's the same here, but we say simulate the buy, well, then we're going to generate a nice 10 stock list that might be a really good candidate for bouncers. not because of the bulk results on the back test here, but because of what the single symbol is showing us. Do the same thing, okay? Hey, every time these guys come through and get popped on a low with big volume, a lot of the times they'll be bouncing in a 60-minute period, right? So in essence, it's real easy to grab these symbols, highlight this whole row, hit Control C, go and paste that into a spreadsheet, copy that symbol column, make a custom list, just like I did here. And then you're going to have some nice statistical probability, not for an automated strategy, but for a manual ticker with some high probability symbols based on the event, buying that stock hitting a low. In other words, trying to catch that knife, but applying a little bit more statistical probability, or some, I should say, and the same thing for fading and making a contra entry here. So, needless to say, if I pointed the window to this little short list here, which I gleaned from here, you'd be rocking some pretty good statistical probability, but that's not what we want to focus on. We want to focus on the chart in real time and go, okay, well, I know the stats. I know that this guy's a repeat offender. I mean, my goodness, look at KL right here. If we pulled these trades up and started looking at them, this guy's come through 10 times in the past 40 trading days. And 7 times out of 10, it's going to bounce, and there's going to be profit potential in that 60-minute hold time, 30-minute hold time, 15-minute hold time. So, this is the way that I would use the symbol optimization tab, not for generating results that look too good to be true, but definitely generating a high probability list of stocks that have a history of acting in this capacity. And keep in mind, I did it with my 2 favorite alert windows. Try it out with your 2 favorite alert windows. You never know what you're going to find, because even when I had this set on 1, we still had plenty of stocks in here that were repeating large numbers in a 40 backtest date period. All right, so I hope this makes sense to everyone, because it's definitely off the beaten path, but it makes a lot of sense to me. I didn't get to watch these windows as much as I would have liked to today, because I did all this stuff over the weekend, but rest assured, I'm going to be making my own custom versions and watching them for tomorrow's session. So, off the beaten path, but just a way to make use of the symbol optimization tab. So I hope everybody followed there, and if you have any questions, by all means, pop them into the questions panel. We are approaching the end of the session here. So, Scott, if you are ready to walk us out and let everybody know how they can save a little bit of dough on an upgrade or a new subscription, then we are ready for you there.
Yeah, let's pull those slides up. A couple items on the way out. We have a new selection of ebooks. Get them while they're hot. There's 2 chapters per book, organized by different topics about swing trading, active investing, range breaks, and pullbacks. Both Jamie and Steve contributed chapters, so check it out. Just go to trade-ideas.com/setup, plug in your email address to get the download links. It's a podcast. We had a new one up last Friday. I think we're on a hiatus for the July 4th holiday, but then we'll be back on again next week. Just search for Trade Ideas Podcast wherever you listen to podcasts and add us as a subscription, and check out some of the interview podcasts from the past. You can scroll through and download old episodes too. We got a code that's good this month, brand new one for July. Holly in July lets you save 15% off your first month or year of Trade Ideas. This is also usable to do an upgrade. So if you're on a standard subscription and you decide you want to do an upgrade, just go ahead and plug this in after logging in to the website. When you select change your subscription function from your account management area. We're going to have this recording up later on tonight or tomorrow. You get an email reminder tomorrow with a link to the playlist so you can find it. Any questions, shoot us an email to info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Follow Steve at Today Trader. We've also got @Trade Ideas and Trade Ideas Pros, the Facebook handle to follow. Thanks, everyone. Thank you, Jamie. Thank you, Steve. Have a good one.
See you tomorrow.
Thanks, everybody, for popping in. We'll see you tomorrow.